Hey guys, Mike here. So boy, it's going to be a crazy week this week because we got a boatload of earnings, which I'm going to show you. And another chart I'm going to show you also that actually breaks it down by week. So you get to see which week will be the absolute most crazy, because there is one week where it's just so many earnings. It'll make your head spin. Then, of course, economic data. It's just a slew of it going to be coming out this week. Again, pay attention how the market is going to respond to the news. Is bad news actually going to affect the market, or is bad news for the economy still good news for the market because of the Fed tightening and all that good stuff? Okay, so we got to keep that in mind. Plus, I'm going to go through a bunch of different charts with you, more than I usually do. But first, I'll start off with this right here, just getting you up to date. And let me know what you think in the comments about some of this stuff, because some of it was actually surprising, right? And one was right here. It was construction spending related to manufacturing. And you can see it was up quite a bit and higher than it's been ever at $108 billion. So the construction industry is still going strong. Let me know if you were surprised by that. Another one was bankruptcies, which I will keep you up to date on because this is very important to follow. Again, as bank standards tighten everything, you'll see this for smaller companies more than the bigger companies. But as you can see in March, again, it ticked up. It ticked up every single month since starting in, it looks like, November right there. So definitely the trend, if we look at this, if you look at this as a stock chart, you would say, yes, the trend is up currently. And so it should, I mean, I'm not surprised. Are you surprised? Let me know in the comments about that. And then this one was interesting. Check this out. I've never seen this before, but this is the venture capital, is a VC index, right? A lot of risk on that versus the NASDAQ composite index. If you look at any point in time, especially coming out of crashes, it absolutely outperforms the composite index, the NASDAQ, by a mile. Look at what is currently happening. The NASDAQ is actually outperforming the VC index. I mean, that is amazing to see, especially if supposedly we're supposed to be coming out of a bottom here in October and just going, crazy. But I guess risk is definitely off, right? Now, this is another one. This definitely affects markets, right? Investors have pulled cash from the U.S. equity mutual funds and exchange-traded funds in 11 of the year's first 15 weeks. But let's be real about this. Forget about the first 15 weeks. Let's go back even farther than that. Let's go back to November, so roughly the first 20 weeks. And you can see, if we really look at this, there's been a whole lot more money drawn out of the mutual fund and exchange-traded funds than put into it. I mean, look at that big withdrawal right there. But you can just see it. I mean, it's plain as day that, yeah, we're pulling it out. Now, the question is, where's it going? Have you been doing this? And if you did, where did it go? Put it down in the comments. Where's a lot of it going? You know where it's going. It's going to money markets, right? Because people, even in the comments in these videos, you can see it. Why in the world would I just not draw 5% almost totally risk-free versus sitting there putting in the market, not knowing if we're going to go on a deep dive or actually start rallying or whatever it is in all these uncertain times, especially for people that are closer to retirement, right? Or in retirement, for sure. And so, let me know what you think about that. But this is, I mean, look at that. You got a total of 6 actually putting money in. You see some 2 bars up there, quite a bit, but the rest of them, a lot more money has been taken out since November for sure, which is, if you think about it, surprising, because what have we been? We've been on this rally since October, right? And if you get anything out of this, guys, please hit that like, subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And so again, let me know what you think about all that down there in the comments and stuff. And so that's going to lead me into the charts. I'm going to try to go through these as fast as possible, but there's more than I usually do just because of some things I want to discuss. And I'm actually going to start us off with the IWM, because that's a hot topic I'm seeing. And you can see this is a ratio, IWM divided by SPY, of how the IWM has performed, compared to SPY. And you can see it's absolutely formed horrendously since March, okay? And so, and I guess people shouldn't be surprised about that. But some people are worried about it because they're feeling, well, is this the canary in the coal mine? Like, what's going on? If we're, supposed to be rallying and coming off the bottom and going into a new bull market, usually small caps tend to actually do pretty darn well, but they're not doing that, right? And so the SPY is outperforming them. And if you look on the weekly, you can just see it even more plain as day, right? So people are expecting a bounce. They're trying to play for a bounce on this. And when we look at the chart itself, you can see it and understand when the SPY is outperforming IWM, that does not mean the IWM is just going in the toilet or anything. It can be going up, but the SPY is going up harder, right? And so if you look at this, you got to break out on the IWM. You got to retest. And there is a gap above around 180 to 182. So people are looking for that to be filled, which could easily be filled this week for sure, if it has a good week. And also, if you look at it, there is a volume gap, which can act as a vacuum right there to allow this to flow through very quickly to move up and fill that gap and then continue on, because we've been in this chop box for, you know, months and months and months. I think it's like 9 months now or something. And that's just the way the IWM trades. Now, a lot of people are trying to play this with TNA, and this is a small cap Bull 3X ETF and stuff. And you can see it moves fast, right? I mean, 3 times what the IWM roughly will return if this happens. So a lot of people are playing that right there. If you're looking for a way to do it and you like to take risks, because triple leverage ETFs are very risky. Now I'll go into the SPY, right? And so you can see, obviously, you got your breakout right here. You can see above that, you're seeing less volume right there, so the price could move fairly quickly. But you see, when you look at this, the weekly expected move for it's like 407 to 418. And what I found interesting was the weekly expected move actually came down just a little bit, but there's actually a gap right above people are looking at around 420 to 421 that hadn't been filled yet, right? And so it depends on earnings, economic data, all this good stuff. We'll see if we can get up there and move up to that, but you're looking at a decently small range, okay? 407 to 418 roughly is what the options market is expecting to happen. And the flip side of that is I found this chart and I thought it was interesting. It'll say, well, what if we're just in distribution right now, right? And usually what happens during this time frame, this is when big money loads up on shorts very quietly, right? Then events happen, boom, that's what pushes us lower, okay? And then that would bring a big gap that's down below into play. And so if you look here, if you've never read about Wyckoff, just read about it. It takes like 5 minutes to kind of get an idea what we're talking about. But it's Wyckoff events and phases, distribution pattern is what they're looking at. Not saying that's going to happen, but obviously leading into all this economic news, and then we got these earnings and stuff, it'll be the perfect time for it to happen. Now, looking at what, remember, OPEX this week, okay, on Friday. So got 4.5 million so far. And as you see, people are loaded up on puts, right? So again, I think we're too bearish to even make a big move down, but you never know. It does happen, okay? But if you look at puts to calls, not even close, okay? And so we're sitting right here in this area right here. So again, we'll have to see what happens. I mean, but again, when you got this many puts, we've had this happen for a while. We still haven't had that move down. I think it's what keeps us from moving down, all right? Now you got Tesla. Of course, Tesla, what's happening? It's got this trend line again. Still looking to break through. It has earnings this week, which we'll go over. It's sitting right on the POC, but there's that volume gap, right? Acts as a vacuum. So if it has positive news or the market wants to move it, absolutely can move up very quickly. You got a weekly expected range of 170 to 200, which for Tesla is nothing on earnings week. That is absolutely nothing. And so you know as well as I do, if it has great earnings, great forecast, depending on what Elon says, easily can fill that gap above. There's no ifs, ands, or buts about it. Now, if you look at what's going on this Friday with its option so far, and this will change daily. You know, right now it's expecting around 185 for Max Payne. You got a $200 call wall, 150 put wall. And it was funny, if you look far to the right out there, you can see some people got 319 calls, 305 calls. And so people were expecting some big moves when they bought these, because those are most likely bought a long time ago. But, you know, again, this one will depend on earnings for sure. Because remember, they've been cutting prices. People worry about margins and everything else, but usually they do pretty good on earnings. So we'll just have to see how the market wants to respond. And this brings us to Apple, and it's all-time high trend line, right? 4 rejections, sitting there possibly for a 5th one. Another way to look at this is if we draw a trend line here, get rid of that one, all of a sudden we got an ascending wedge. So are we going to see a breakdown? That could happen, right? You got 162 to 169. I found it kind of funny that the weekly expected move on the high was the exact same as last week. So pay attention to that one. Google, simple, is sitting right there at the all-time high anchored VWAP. Gap right above it, around 109, 110 area right there to fill. Weekly expected to move 109 to 112-ish. Again, Google does not move that much. But if you look at the RSI, momentum's behind it at this point in time. Again, Google is not some big, huge mover like Tesla. And so they're going to report on next week, April 25th. So don't have any earnings this week to contend with on that. But a lot of people are playing that gap. I can definitely tell you that. Amazon obviously moved this trend line right here, a little 2-day breakdown there. But again, it's bounced off it multiple times. What do you see? Volume gap right there. So you can get that vacuum suction up if it continues to move up, because obviously the trend is its friend right now. 99 to 106 you're looking at. Again, it does not report earnings this week. So, and then to get to it's crazy, to get to the weekly expected move is like 4%. So it's like nothing to it, right? That doesn't have any kind of catalyst I know of. I think it just really depends on where the market wants to move it. Now, that leads us into earnings. As you can see, and it's all about the banks. It's all about the banks. And I never pay attention to regional bank earnings, but I will this week. Let me know in the comments if you're going to be with me on that. Because you can see there's a whole lot of smaller banks. We got a lot of the big boys last week. We still got a few of the big boys this week. These are all these regionals. Charles Schwab is going to be one people are paying attention to tomorrow. A lot of them report before the bell. So if they're disastrous, we'll have to see. Bank of America, Johnson & Johnson, Goldman Sachs going to be big ones. Lockheed Martin, another regional bank right here if I'm not mistaken. Another regional bank down here. Then, of course, people are going to be paying attention to Netflix. Let me know in the comments if you'll be playing the earnings on this one. Again, this one right here has a huge gap way above it, but it's been getting pushed up by big money. Now, United Airlines, of course, we still traveling. That's what I want to know. It's the only reason I'm listening to that one. Morgan Stanley, of course, they think the economy's going down, the stock market's going down. U.S. Bancorp will be another one people will be paying attention to. Citizens Financial will be paying attention to it. Then we get Tesla, Wednesday after the bell. Let me know in the comments what you think is going to happen there. Then if we move down, you got Discover. This is going to let us know how we're running the credit cards up. How much are they putting away, thinking people are going to start defaulting on their credit cards and stuff. That's a big one. TSM is going to be a big one. American Express, AT&T, people will probably be listening to. D.R. Horton is going to be a big one down there. Want to know about the housing. They're a huge home builder. CSX, Railroad. I'm going to be listening to this a little bit because I know they worked out their contract a while back and everything. Just to see what they got to say. I normally don't listen to railroads, but P&G, all about the consumer. I think they make everything in grocery stores, I swear. And then you'll have Regions Banks, another one, and then Independent, I believe, is another regional bank. So a ton of banks. If I forgot the percentage, it's a huge percentage of earnings are about banks. Then that leads us to this one right here. It's a new chart I found for you. And so this week, you can see over here how many earnings we got. Look at the week after. So not this week, but next week. Holy moly. It is going to be a ton, and it breaks it down by sector, if you want to look at that as well. And so you can see in the week we're in now, where it says 23 banks are going to be reporting. So again, that's a big thing. Now, economic data, hold your seats on this one. It's going to be a lot to do with the housing market, a lot. And then you'll have a lot of manufacturing data this week. So we're going to get to see if the economy is still slowing or not. Shocker there, more manufacturing data, more real estate market the next day. Then we'll get stuff on oil, see if that moves the price of oil or not. The 20th, this is going to be a big one, so we'll have all the jobs data, the Philadelphia Fed manufacturing data. That's going to be big. Again, going back to existing home sales, real estate. The 21st, manufacturing, all that fun stuff. And, of course, there will be Fed presidents out and all over the place trying to probably, again, talk the market down, all that good stuff, but then not try to scare people too much. We'll have to see on that one. But, people would definitely, and, what's been happening, when you see this data come out last week, even the previous week, what was happening to yields? They were just dropping. Every time you got bad economic data, falling off a cliff, and the market sometimes would react positively, sometimes like, ooh, wait a minute, and so that's what I'm looking for, because I don't expect the data to be great or anything, but I want to see how the market reacts to the data, because there's always that point in time where the market, all of a sudden says, oh, wow, this really is bad. And so it starts affecting the stock prices. Right now, that has just really not been the case, right? Because the Qs I showed you in Friday's video is just coiling up for something, right? It's just coiling up, ready for a move, either up or down. And so that's what we got to see. And the other question is, are people rolling out of the Qs, all those profits, and starting to roll into IWM, okay? And, and a lot of people, again, I've been reading a lot of stuff about the small caps and things like that, because the reason why they usually move really well, actually, if we're at a bottom and going into a new bull market, is because their market caps are so much smaller, and so they can just fly, right? And of course, that's the backbone of the economy. It's not the companies on the S&P or the Q, especially not the Qs, right? It's these smaller companies. They're the ones that employ the most people, okay? And so that's what people are looking at. See, is there going to be a recovery or not? Because remember, I showed you a chart Friday. What's the biggest concern for smaller companies? Inflation, like of all things, right? And then finding qualified people for their companies, right? And what's even crazy, I read something, I think it's Arkansas, and it's starting in other states too, to loosen child labor laws, to start allowing kids at 14 years old, I believe it is, to start filling these jobs that we can't fill, I guess. I'm assuming in restaurants, things like that. And I was like, wow, I never thought I'd see that. But, here we go. So let me know in the comments what you think about that. I don't think... I don't know. I don't see me letting if my child was 14, going to start working out in restaurants or wherever else they want to work. But anyway, that's just me. It doesn't surprise me. But doesn't that show you when I told you we're in a labor market like you've never seen before, where one state's done that, other states are discussing doing that right now? That's the state we are in. Okay, as far as the workforce and stuff. So it's going to be a crazy busy week this week. I'll be here every day, so I won't miss a day and everything to report, and we'll talk about the major earnings. I'm definitely looking forward to the bank earnings. Let me know in the comments what you think about that, and I'll end up seeing you guys tomorrow.